Have you ever wondered what an FHA loan was? That's okay, I did too once. Here's what you need to know about this affordable home loan option. An FHA loan is a mortgage loan insured by the Federal Housing Administration, or FHA for short. This type of loan was initially designed for low to moderate income borrowers and is a popular option for first-time home buyers. In fact, the FHA was originally created in 1934 by Congress to help stimulate the housing market and make home ownership accessible to Americans. This was especially important in the years after the Great Depression and World War II. It's important to note that even though this loan option was created with low to moderate income Americans in mind, at the time of making this video, it seems that there is no cap on earned income to apply. So even though the program was designed for low to moderate income borrowers, just about anyone can apply, even the wealthier people. Now, one of the most important advantages of the FHA loan is that it requires a lower down payment than most traditional mortgages. A traditional mortgage or a conventional mortgage might ask for a minimum of 5% down. For most FHA loans, the minimum down payment is 3.5% of the purchase price. This can actually make it a lot easier for first-time home buyers to afford a home because, as is often the case, they might not have a lot of cash saved up for a down payment. The FHA also allows the down payment that people usually struggle with to be made with a gift from a family member or even a grant from a government program. Though it's essential to know that your lender might require documentation of monetary gifts with a signed letter by the person that gave you the gift. Another big advantage for FHA mortgage loans is that the credit requirements are usually a lot more lenient than that of a traditional conventional mortgage. The FHA will consider borrowers with lower credit scores and a higher debt-to-income ratio than a traditional mortgage lender would. This can make it a lot easier for a lot of people with less than perfect credit to qualify for a loan. FHA loans also have a lot more flexible income requirements. Self-employed borrowers and those with multiple income streams can often qualify for an FHA loan, though as usual, there should be sufficient documentation that would be required. And that documentation is really important because if you rewind back to the 2008 housing crash, a lot of the reason for that was because of the subprime loans that were handed out, and a huge chunk of those were because of stated income loans, which were meant to help benefit people who were self-employed. But as the name implies, it's a stated income loan. So these people who were supposedly self-employed would say that they made more than they actually did, which means that they wouldn't have been able to pay for the loan. It's kind of crazy, actually, but that's a whole video for another time. Now, most people think that the FHA just offers one type of loan. And the thing is, the FHA itself doesn't actually offer a loan. They offer a loan program. And then different lenders will issue the loan to you. The loan programs that they have are not just to buy new houses. So let's talk a little about the different programs. The first one is the FHA 203B loan, and this is the one that most people think of when you hear an FHA loan. This is by far the most common. This is the type of FHA loan that you would use to finance a single-family home. Then there's also the FHA 203K loan, and this is more commonly referred to as a rehab loan. This loan is used to finance the purchase and renovation of a home. It also allows borrowers to include the cost of repairs and renovations in the loan amount. There are strict rules and timelines when you use a 203K loan. For example, and this was years ago, so this information may not be up to date, but years ago it used to be that you could not do the repairs yourself. You had to hire a licensed general contractor to do the repairs, and you had to do it within a certain amount of months. I think back then it was 6 months. I'm not sure what the rules are, so you really want to make sure that you talk to a real estate professional and a licensed mortgage professional to make sure you understand what you're getting into when you're getting into a loan. And that's not just for the FHA 203K loan. That's if you're applying for a loan ever. Make sure you do your due diligence. Make sure you know what you're getting into. Now, there's another loan product called the FHA reverse mortgage. And even though it says mortgage in the name, I don't really think of it like a mortgage. They're saying that this loan is available to homeowners 62 years or older and allows them to convert a portion of their home equity into cash. Now, if you don't understand what I just said, I'm going to try to reword it in a different way. Essentially, when you're signing up for a reverse mortgage, it's not a loan in the way that you would normally think of a loan. You already have a house that you have years of equity in. Equity is the amount of money you would receive back once you sold your house. So when you go to get a reverse mortgage, you're going to the bank and saying, "Bank, you can have my house. I will sell my house to you, but you're going to let me live in my house and you're going to pay me what I would get for selling the house to you over a certain amount of years. So at the end of the payments, you don't own your house anymore, the bank does. If you can't tell, this could be a good thing. It's generally created for senior citizens who maybe didn't have the biggest amount of retirement, or they don't think that they'll have a very long life expectancy, so that they could have access to funds earlier so that they could still live. But if you can't tell, there are downsides to this program, so it's really important to talk to a financial advisor, because there's been a lot of people that have gotten in trouble financially when they did this because they lived longer than the payments for the house. And then suddenly they didn't have a house or anywhere to live anymore. So really make sure, if you're a senior citizen or if you're a family member of a senior citizen that's considering this, to talk to a qualified professional who is on your side, because this is a very, I don't want to say dangerous, but I mean, there are ramifications to this type of loan. You really need to consider the consequences and if it fits your needs, because it's great for some people and it's a terrible option for some people. So you need to make sure it fits you. And finally, there's the FHA Title I loan program. This loan is for homeowners who need to make repairs or improvements to their homes but do not have enough equity to qualify for a traditional home equity loan or line of credit. Going back to the most common FHA loan, the 203B loan, that's the one you would use to buy a single family home. One of the most polarizing aspects of an FHA loan is the mortgage insurance premium. Some people like this and some people don't. The mortgage insurance premium, or the MIP, is a fee added to the mortgage payment, and it's used to insure the loan against default, which this is a standard practice. The MIP is required for all FHA loans and is typically less expensive than private mortgage insurance required by conventional loans. Now here's the thing, unlike PMI, MIP on an FHA loan is permanent. You cannot remove it. But with private mortgage insurance, maybe you're paying a higher amount, but when you have PMI, not MIP, when you have PMI on a conventional mortgage, once you pay down 80% equity, that falls off. It's gone. So that usually happens, I think, somewhere around 10 years or so into your loan, of a 30-year loan. You can pay down more faster if you want to get it to fall off faster. But if you were just making the minimum payments, I believe it falls off somewhere around that 10-year. But with an FHA loan, the MIP is forever. It's for the whole life of the loan, all 30 years. The only way to get rid of it is if you were to refinance into a new type of loan. So while some people might like the smaller payment up front, it may be the worst decision because it doesn't fall off. And there are some more downsides to an FHA loan. One of the most significant drawbacks is that loan limits are lower than those of a conventional loan. This means that borrowers may not be able to borrow as much as they would with a conventional loan. Additionally, the FHA loan process can be more time-consuming and complex than the process for a conventional loan. That may mean more documentation and paperwork. And I know that I said it may mean, but it means a lot more documentation and paperwork. There are entire papers required by federal law that are not required with a conventional loan. And the final disadvantage to an FHA loan is that the FHA has a more restrictive list of approved properties. And when we say a list of approved properties, it's not like the FHA has a list of houses where they say, oh, Joe's house on 56th Street is approved or is disqualified. They don't have that, but they do have certain standards that have to be met, and those can be pretty high. The FHA will only approve loans for properties that meet particular safety and soundness standards, and this can make it more difficult to find a home that meets the FHA's requirements, especially in older or more rural areas. Now, there are a lot of rules, and typically an appraiser would come in and they would look at it and they'd let the bank know and they'd see if it qualified or not. Some of those would be missing paint on the side of the house. That's such an easy fix, but it wouldn't qualify under an FHA loan. I've also seen if there's damages to the driveway, maybe even though it's not a big deal, like that could not qualify under some FHA loans. So you really need to make sure that you're thinking about what properties could qualify if those are in your price range. And not only that, but you really want to work with an experienced, qualified real estate agent who knows what they're doing, who's been through the process, who's worked with a lot of FHA properties before. Because if you work with somebody who doesn't have that experience, it is possible that you could run into some problems down the road. Now, I realize that I just gave you a whole list of why FHA is bad, but in my personal opinion, FHA is not bad at all. In fact, I would not be a homeowner today if FHA loans did not exist. I bought my very first house with my husband when I was 24 years old with an FHA loan. It was the only way that was possible because, like I mentioned, we didn't have enough money for a down payment. So we qualified with 3.5% down. There's no way we could have made 5%, not when we were 24. So FHA has a purpose, but you need to know when to use it and you need to know how to get out of it. So you can get out of it by refinancing or selling your house. So maybe if you have your forever home, you don't want to sell your house to get rid of the MIP. Think about refinancing. Save that money up to make it possible. So all in all, FHA loans are a popular option for first-time home buyers, in particular for that reason I just mentioned, and those with lower credit scores. They offer lower down payment requirements, more lenient credit requirements, and various loan options. However, there are also some downsides to an FHA loan, including lower loan limits and more restrictive property requirements. And before ultimately deciding on an FHA loan, you really need to balance the pros and cons and if it fits your situation. When we talk about real estate and finances and credit and everything is really subjective. So it's really going to be unique to you and your situation. Maybe in your situation, an FHA is perfect for you. Maybe it's not. You really have to decide for yourself and talk with professionals to help you guide your way. Now, I'm curious, what type of loan would you be considering if you were going to get a loan? Would you go with an FHA? Would you go with a conventional 30-year fixed? Maybe you would go for an adjustable rate mortgage. What do you think? You tell me in the comments below. I'm so happy I got to share this info with you. If you haven't already, go ahead and like this video and subscribe to my channel. You can look forward to more great content like this in the future. But until then, I will see you next time.